subpoenas have been sent, investigations launched this morning into what was a pretty messy IPO of Facebook. According to Reuters, the state of Massachusetts is now looking for answers about possible insider information. Sent subpoenas out to find out if Morgan Stanley lowered earnings and revenue guidance for Facebook just before it went public, but only informed some of its bigger clients and not its investors. The company issued this statement saying that Morgan Stanley followed the same procedures for Facebook offering that it follows for all IPOs. These procedures are in compliance with all applicable regulations. And the group that self-regulates Wall Street, the financial institution regulatory agency, also launching an investigation. Facebook shares have dropped 18% from last week's original offering price of $38 a share, which is bad news then on several fronts. Nice to have you, Christine Normans joins us to talk a little bit about this. So let's talk about the investigations first. SEC, we know that the Financial Regulatory Commission as well, and the state of Massachusetts. Right. Why are they looking into wrongdoing?
They're trying to find out what Morgan Stanley knew inside, or what they were telling their top clients inside, and whether they told everyone. And Morgan Stanley is saying it did nothing wrong here, but we all knew. We knew that revenue was slowing for this company. I mean, that's something the company, Facebook itself, had said in a regulatory filing. So you had a lot of people on the street going back and sharpening their pencils and saying, wow, this is not a great time for Facebook to be, showing us that revenue is slowing a little bit at a time they're trying to go public.
But any wrongdoing would be, in fact, if Morgan Stanley was telling its big investors that they valued highly one thing, but the smaller investors, like the apparently 10 zillion friends I have who got in on the Facebook deal, not actually making it public to them. That would be wrongdoing.
That would be what they're looking into to see if that actually happened to Morgan Stanley. Morgan Stanley is saying that did not happen, that it did not happen. And again, it's all based on, it's not just an analyst inside Morgan Stanley saying, I think their revenue is going to slow. It's because the company said their revenue was coming in lighter than they had thought. So it was public information that they were making this call on. Who did they make the call to? That's what everyone's going to check out.
But you also have all of these folks who are upset they put out so many shares. And so explain that, because the person at home is sitting here going, okay, what do you mean you put out more shares?
Well, they thought there was going to be less access to shares. Right. People got more shares.
Right, and that started happening late Thursday. Brokers were saying, wow, we're up. We're up. People don't want any more than we've offered them, and there were still more shares to go. And you make a really good point, because you look at where the stock is trading right now. It's trading right now at the beginning range that we first heard of that Facebook was going to put forward. So somewhere in there, Facebook and the banker got involved in their own hype about how much demand and what the value was of this stock, and they priced a lot of shares at the very high end, and the public just didn't want that many.
The graphic of Facebook is 38 to 40.
42.05,
and then it's been like this, down to 31 today.
Yeah.
And don't you think it will recover, though, eventually?
It's hard to say. I mean, you look at Groupon, you look at some of these other ones that had that went public and they've been sort of struggling along. I think that every time they buy a company or they make some sort of a strategic hiring, I mean, what are they going to do with all this money they made? They made $16 billion or $18 billion in the end. What are they going to do with that money? Every time there's a press release or a regulatory filing about what they've done with that money, that could potentially move the stock. But the bottom line here is you have 420 million shares. I likened it on the day of the IPO as an anaconda trying to swallow a goat. You have 420 million shares.
I don't call that analogy at all.
No, it's just hard or easy. It's hard. It's very hard, and it takes some time, and it looks ugly, and that's what we have. And it's almost like, I hate to say it, but it's cascading set of errors.
Isn't the appropriate...
And everybody's going to sell soon,
pricing
right?
it too high?
90 days, the people who've been waiting to become millionaires are going to sell their shares. How's that going to change things?
You got a lot of paper millionaires in 90 days. I mean, I think you're going to start to see them selling shares.
Isn't it just the appropriate conclusion regarding this entire Facebook story that there is no conclusions, there are no conclusions, that we don't know what Facebook is worth, we don't really know what its future business will be like, we don't know if the IPO was right, we don't know if the current price is right.
Isn't that the story of the stock market 101?
No, not just the stock market 101, it's the stock market evaluated over a 2-week period.
Right.
Let's just kind of see where this shakes out.
But if you evaluate a stock market over a 10-year period, sometimes, I mean, look at Jim Collins, who wrote all this terrific business books, right? Sometimes you're later, looking back, the things that he thought were terrific, paths actually turned out not to work out so well.
That's kind of my point.
In the last 10 years hasn't been so great. But look, this is why we say IPOs are risky, and this is why it's hard. Before the IPO, individual investors were complaining that it was so hard for them to get shares. After the IPO, individual investors are saying, why wasn't I being protected? IPOs are risky because we don't have a track record of the company.
Let's just be honest, they wanted a sure bet.
They wanted to buy a lottery ticket.
They wanted a
lottery
bet,
ticket.
and they didn't get a sure bet, and now they're sitting here complaining.
They wanted the hype to be real.
You know,
yeah, but they want the sure bet.
It's also it's an existential crisis for social media companies, right? Because it really is. They change your life, but can you make money off of them? Right. You know, I mean, if some people who know Facebook say, well, this is just so big, it's changed the whole world, it must be a good investment. Investments and life-changing social media aren't necessarily the same thing.
But, you know, the conventional wisdom is you should purchase what you know. Yeah. And many people who use Facebook and like Facebook say, okay, I know it, I like it, I use it, ergo, I shall purchase it.
I say it's not about social media exclusively, right? Doesn't Warren Buffett say that you could have done more for American capitalism if some investors sat on the beaches of Kitty Hawk and shot Wilbur and Orville down? And the American airline industry would never have sucked all this public money up into its black hole of industry.
Okay, how about that for a sharp turn before we head to headlines?
Wow, that segue. Thanks, Will. I appreciate that.
Yeah, exactly. I appreciate that as well, Will Kane.
That was actually a bow and circle.
I'm having a hard time following all these analogies.
Time. We can't get.
I live in a world of analogies, Christine.
Clearly.
Yes, you do.
So clearly, and it's a challenge for the rest of us. Christine, we're going to ask you to do double duty.